All right, welcome back everyone to the Wall Street Rundown, the show where we break down the markets, money, and what's moving and shaping the global economy. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, everyone?
Man, oh man, another monster day in the market, which we kind of talked a little bit about. It's all focused on a specific sector, man. Still moving like crazy. The market kind of like, I don't know, man. It's like somebody lit up a fire under some of those specific specific sector of the market today and this whole week, actually. You know what I mean? So we reached a new high again. Again, driven by strong QA earnings in some of those AI sectors that focus on AI. Nasdaq is in total. Nasdaq was up like 15% just in April alone, which is crazy, man. Um, Russell 2000 also almost hit a record new high. Let's see what else. S&P 500, 80. I mean, no, nearly 80% of all stocks companies that's in S&P 500 have reported Q1 results with earnings growth on track to exceed 18%. Like the AI story is just, I feel like it's just getting bigger and bigger and bigger and bigger. Now, I know we talked a little bit about this, like what's actually like driving this market, like what's actually happening that the market is actually moving this higher, this faster. So while let's break down a little bit, man, because I think we talked about how this is very, very like narrow where the market is actually focusing on. If you look at the other ETFs or other sector of the market, they're not really participating in it, right? So let's talk a little bit about that.
Yeah, so if you look at this rally, you just have to understand that it is so concentrated in one area of the market that I wouldn't say it's not a red flag, but it is troubling. And I don't
Mm-hmm.
mean troubling in a panic way, but what that basically means is that a rally this strong can fall apart just as easily as it got to where it's at, right?
Yep.
Because I'm just looking at the sectors today. SMH was up 4.9%. XLK was up 3.4%.
Mm-hmm.
And then the um let me actually put one more ETF in on this list just to and then the bug ETF, which concentrates on cybersecurity, was up 5%. But look at all of these other sectors. Home builders down,
Mm-hmm.
communication services down, energy down, industrials down, financials down,
Yeah.
healthcare down, and then lastly, utilities down. Real estate was basically flat. XLP was only up 0.2%. XLY was only up 0.27%. IGV was only up 0.33%. So when you look at the dynamic of where the money is flowing, it is going into just one like sector of the market, and it's semis. And today, cybersecurity, which we'll get into a little bit later.
Yep.
You look at QQQ up 2.34%. SPY was up 0.83%. IWM up 0.68% today. But you look at the RSP was only up 0.28%.
That's crazy.
That's it. So the concentration of where money is flowing is something that people need to be mindful of. And what I started to look at data to say, okay, are people moving money out of cash on the sidelines and pouring money into stocks? And the answer to that is no.
Mm.
Money market balances are still holding fairly steadily. There's not a lot of drainage coming out of money markets, which tells me, okay, where's the money coming from? ETF inflows. Investors are really backing into risk on behavior. Like they
Mm.
said, so this was State Street. It says State Street reported that US listed ETFs took in about 1 point, no, 178 billion in April, the second highest monthly total on record, which is crazy. So ETF inflows are really moving. talks about AI inflows. We talked about this already. And here's another thing that I just want people to be mindful of, to listen to this. Leverage. Margin debt has reported around $1.2 trillion, which was up materially from last year. So margin debt and leverage has also fueled some of this buying. Hedge fund leverage as well. So it says Goldman Sachs prime brokers noted that gross leverage across its prime brokerage book rose for a third straight year and reached its highest level on record last year. So a lot of money that's being fueled into this rally is leverage.
Mm-hmm.
And another big fuel, another big driver, corporate buybacks. So a lot of corporations have pretty much green lighted CFOs to say you have X amount of dollars to use to buy back stocks. And I don't
Mm-hmm.
know, and we've heard some big buyback stories from like last year. And I really feel like after the war kind of the news of the war kind of subsided, that maybe CFOs were getting really aggressive in buying back their stock in the open market. So it's not one of those things where I feel like I wouldn't call it a bubble. I'm not gonna call it a bubble. And the reason why I don't want to call it a bubble is because the data that you just gave about 80% of the S&P companies that have been reported, the earnings have been good. The earnings stories have
Mm-hmm.
fundamentally been good for most companies. Now, you've got your few losers that, maybe they fell apart because they didn't deliver. I think CoreWeave got hit pretty hard today when
Mm-hmm.
they reported. I don't think they're in the S&P 500, but for the most part, earnings have been really, really, really good. And when earnings and fundamentals have been good, it's hard to really call it a bubble because
Right.
there are numbers to back those things up. Now, if you tell me people cooking the books, like I said on the show on Wednesday, then that's a completely different
That's
story.
a good different problem. Yeah.
But I don't think that that's the case. So, yeah, man, I'm not surprised that we're at all-time highs. I think it's the speed at which people are moving into these names. Like you get stocks that are up 8% one day, then another 8% the next day, then 12% the next day, then
Yeah.
20% the next day. That
Yep.
is what bothers me. So I think that people should take some caution, especially on a day like this where you see us rally, but you also see the VIX finish in the green.
Mm-hmm.
Not a lot of people paid attention to that, but the VIX didn't really budge. I thought the VIX was going to sell off today. It didn't. So it
Yeah.
tells me that some people are probably still hedging their bets against what the future could hold. Because let's just be honest, this war narrative has not been resolved.
Nope. Nope.
No.
Nope. And
So,
It's going longer than what they thought it's going to go. We
correct.
thought it was going to be a couple of weeks.
Yep.
It's not being a few months. So it's like
Hmm.
it's still going.
Yeah.
And we saw some escalation today also. But
Yes.
I think overall there's a lot of other uh, things that's happening in the market,
Hmm.
right? That it might come out later. Like, but I feel like there's other things that's happening within the market that one you see like even the stock that's moving today, like the way they're moving like meme stocks. If you think about it, you know what I mean? It's like those some of those stocks are just like stocks that you probably wouldn't like pay attention to on a regular basis, but you just see them running like crazy, you know. So again, we've seen this story before when you start seeing like some of those smaller stocks that nobody really heard of, or if you look at their books, you'd be like, why anybody buying them? You know, it's like you start thinking about those things. But as Wale said, like there might be a little bit of pain coming down the road, especially with the VIX not budging. Also, that's another big thing to keep an eye on.
Like I'm looking at this stock, RXT. RXT,
Mhm.
Rack Space Technology, was up 200% this week. Not this month, not
Sweet,
this year, this week. We're talking about a 5-day trading period. So
that's
when I
crazy.
when I see stuff like that, and I think they had earnings today, so that was also a driver. to me, I just feel like some of these fund managers, maybe they were a little bit too defensive earlier in the year.
Mm,
Maybe they got a little bit more defensive when the war started. And now the optimism where they feel that we're under allocated towards what is really driving the market, it's like we just got to keep buying. We just got to keep buying.
mhm, mhm.
So it's just been, I mean, it's been crazy. And I think Michael Burry was talking about, he was saying that this reminds him of the last months of the dot-com bubble.
Mm.
And how should I put this? I don't, I can't really buy that per se, because again, what drove the dot-com bubble was companies that had no products, no revenue, no nothing. It was just all hype,
Mhm,
right?
mhm.
At least in this market movement, we're seeing numbers that can be supported by the growth or the
Yeah,
growth potential moving into the future. So I don't know, man. I will say this though, stocks are not cheap. They're not cheap. They're
they're
expensive.
not cheap. They're not cheap.
So if you're thinking about chasing some of these names and things like that, do your due diligence and really understand, okay, what are you paying for future revenue? So look at these PEs.
Yeah.
Current PEs might be a little bit high, but I would start looking at forward PEs, right? What are these companies projecting for future revenues, and is it worth the price to pay today? And
Mhm,
go
mhm.
from there. So, yeah, man, the speed is what bothers me. That's it.
Yeah, yeah.
Yeah.
I can see a bubble in terms of like AI disrupting some of
Yes.
those companies, right? So some of the big companies that we know of, AI is taking like a big chunk of their business. Man, you see what Anthropic is doing. We're like taking something that a whole company is built a software around this one operation, one thing to be done. Think about Adobe. Think about software that may be like managing properties, or software that may be like doing something repetitive for certain companies. AI is literally Anthropic and Claude are like, hey, we can create an agent in like less than 7 days. You can take it. That's for you, for your company to use. I think I can see some companies collapsing because of that, because they can't really sustain competing with something like, Anthropic building those, tools for companies that will take over. You know what I mean? So again, I, do I see like a bubble, let's say, like in terms of AI, like disrupting things? Not necessarily, but actually, the private credit again is going to come up in this conversation. It's going to come up in this conversation. You know what I mean? Like, because I feel like, so I was reading more on that, right? So it's like after 2008, right, when the bank collapsed and all this stuff, there was a lot of restriction that was put on the banks, basically, right? So they no longer can lend like just frivolously to anybody, especially the smaller companies, right?
Hmm.
So now dun, da, 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 enter private credit, because now they can take and replace that little bump, that little hole that just created by the bank. So now they just lending to everybody, right? They just giving money out, like, we're taking loan in, we're giving them out. You know what I mean? So and now you have all these rich, wealthy people who now have opportunity to take their personal money, put it into like a private credit, and then the private credit turns around and invests it somewhere else. Now that process was great, right? I think they were making a lot of money, man. Like from 2008 to like probably like this year, maybe like sometime last year, they were making a lot of money. Now, what I looked at is they invested a lot of their money into software companies. And you see what's happening with those software companies now.
With some of the
AI,
ones that went private. Yep.
yep. So AI is coming in, disrupting the whole ecosystem. It's like,
Yep.
oh, you guys are investing in this? We can create the same thing in like whatever time, you know what I mean? So now everybody's like, oh shoot, my money is like, let's for example, look at Blue Owl. Like my money's in Blue Owl. Like if we saying like the investment that you guys been doing all these years in those, so because if you think about software, you can create a software, sell it out as a subscription, make money on top of it, eventually sell the company to somebody else, make money, all your investors gets paid, you rinse and you repeat, you rinse and you repeat, you keep going, right? But once you get something like Anthropic or Claude that's able to build some of those software without the need for any outside investors, guess what? Your money is no longer going to grow because who's going to buy the company? Like I can go around and build the same software you have for
Correct.
the small price, you know?
And another thing I want to also say is the software companies that had the model of seat-based revenue, right? Where if you buy more seats, you make more revenue.
Yeah.
That model is in trouble.
Is in trouble.
That model's in trouble.
Yep.
And that's just one of those things where if you're a software company and you are not in a mission critical portion of software, you're in trouble. And I mean, the private credit story, man, to me, it's something that's in the back of my mind because the amount of leverage behind it makes me nervous.
Uh,
And we've seen defaults, we've seen, you know, some of the scandals that have happened, but I keep hearing people saying, oh, this is just a private credit issue. This is just a private credit issue.
uh,
This is not
uh,
systemic risk. And all I keep asking myself is, are we sweeping it under the rug so that people don't get scared? Like,
uh,
is that what we're doing? Also, too, you got to understand that I'm pretty sure when rates were super, super low, there was a lot of borrowing that went into that.
yep.
And it is possible that some of these loans or some of these businesses may need to refinance at higher rates. Are they going to be able to meet their obligations? So
Yep.
to me, I keep saying this, if there's anything that's going to cause a market wide like panic sale, it's going to be private credit, in my opinion. That's what I think that's where the smoke is.
Mm-hmm.
Commercial real estate, we haven't heard too much from it as of lately. That's another area that I would be worried about, but we haven't heard a lot of news from there.
Right.
Um, and that whole Hadavirus stuff, man, I don't know, man. That sounds kind of suspicious right now.
They said they said they shut down everything. Just like I don't know, man. We'll see.
Yeah, we'll
Especially
see.
those 25 passengers that left without nobody knowing, like that they left the boat. Like, come on, y'all.
Yeah,
Like,
I don't know. I'm not a medical expert. I don't know what the alarm level is with that, but what I will say is,
it's
I
serious.
didn't like what I saw.
It's serious. It is serious.
Yeah,
It
so
is serious.
we'll see, man.
Yeah. But the other thing also with private credit is the administration that we have in the Trump administration. And I think this is going to be the craziest thing if they can actually pull it. They're actually trying to get private credit to be part of the 401k program. They are pushing for that because most people probably don't know this, but the 401k problem is the biggest piece of the pie when it comes to stock market because you got everybody investing in it. Like you got employers, everybody investing. There's a huge amount of money that's locked up in 401k. If private credit can get in there and be able to be part of these basket of ETFs or whatever, or create their own, they can get access to a lot of money. Now, if that happens, I'll be worried.
So this is let me give you let me give you some statistics about private credit in the retail world. So
Mhm.
you can invest in private credit in the retail world by using what are called business development companies, right?
Mhm.
Business. So there are ETFs that are invested in what they call business development companies. So this is private credit's way of saying, hey, retail, you can be a part of the private credit story. I'm just going to give you some fun data, some BDCs and how they have pretty much done. So here's a BDC, Bearings BDC, BBDC, and its all-time performance, at least what's listed on Robinhood, is minus 40%. But what makes it so attractive to investors is It pays a 11.69% dividend. So
Damn.
you're looking at the income, you're like, whoa, this is really good. But you're also watching drainage on your
Mm,
principal.
yep.
Let me pull up another one. Okay, this one's actually not too bad. Putnam BDC Income ETF. Okay, the yield is a little bit lower, 9.16%. And over the last 5 years, the fund is only up 10%. So hasn't really done much. But if you go look at some of these BDCs, let me go look. I've seen some BDCs. Here's another one. ICMB, Invest Corp Credit Management BDC. The yield is 43.1% now. But over
Yeesh.
the last year, the principal is down 40%. So to me, throwing in private credit into a 401k to me is that should be a no. That should be a no. Unless investors sign disclosures saying that they understand what they're getting into
That's in the risk. Yep.
and understand the risk. If I'm a 401k um like administrator or manager and they came to me and I'm the advisor to the plan and said, should we open up private credit to our investors? My answer would be no. I'd say no.
Mhm.
Because to me, when you look at how 401ks are set up, there's a reason why they only allow mutual funds.
Yep.
It's to protect the investor against themselves.
Hmm.
There's a reason why target dates are so popular. Is because a lot of people don't really put in the work to really manage their 401k. So
Yep.
you can just do a set it and forget it strategy. To me, that fits the majority of people that invest in 401ks. And that's what they need. Diversity, asset allocation, somebody managing their assets so that they don't get emotional about making changes and chasing returns.
Right.
Yeah, I think if you put private credit in 401ks, I do not see that being a happy
Hmm.
ending at all. I don't because,
Yeah.
like I said, there's a reason. There is a reason why they do not allow you to invest in individual stocks in your 401k unless you sign a disclosure and your 401k administrator has what's called a brokerage window. You pay extra for that, and you got to sign disclosure saying that you are buying stuff that are outside the plan
Outside the plan. Yep.
on your own merit and your own will. We, as the plan administrators, are not responsible for whatever heck you do. You want to go
Right.
100% Tesla, go 100% Tesla. But yeah, that to me is a bad idea. Bad idea.
Yeah.
Bad idea.
But they're pushing for it, man. So you never
Yeah,
know. It might be happening soon.
yeah,
A
yeah,
private credit coming to your 401k real soon. So
yeah.
you
And
just
I
never
think
know.
yeah, people are going to look at those yields and be like, "Ooh, let me get in this."
Yep.
Yeah,
Yep.
yeah.
And that's how they're gonna get people into. That's gonna how bait people in. So
Hmm.
again, we shall see, man. Because I think that's a whole nother problem on itself, on its own. I think in the beginning it might not pose a lot of issues, but I think if they the way it works right now, it might create more issues down the road. But if it happens, which is that's something to definitely keep an eye on the broader market to see exactly how this is going to affect everything else. But let's move
Yeah.
on to Intel and Apple, man. Our beloved Intel again ran up like crazy today. I mean, when they announced that partnership, go look at that chart, man. Intel just went like that was a crazy move to the upside. Intel and Apple, man, it's crazy how like they just came a full circle, right? Because I don't know if you guys remember when Intel actually used to provide Apple chips back in the day, and then Apple went and got the M1 and M2, and I think they're up to like M4 or something like that right now. Their own chip, you know what I mean? And now they're turning around and going back um, to produce a deal to produce a chip for them, basically. Um, I mean, is Apple kind of like late to the game? I don't know, man, but I want to get your reaction on this because that's like Apple needs to do something. Like I don't know. It seems like they're not understanding. it's like they live in a different planet. I know they got a lot of money, but it's like, come on, guys. Like, let's do something.
So surprisingly, what I saw was, I think Apple hit an all-time high today, right? I think
Hmm.
it did. It hit an all-time high today. But what I did read though was TSM capacity constraint. So remember months ago when we were hearing the rumbles about Nvidia and Intel kind of having a partnership. Remember we heard those rumbles?
Hmm.
And I
Hmm.
specifically said on the show, I said, what if Intel came in as like, yo, TSM is we can't we're overworked.
Whoever worked, yeah.
Can Intel take some of that workload from Nvidia? So it it didn't necessarily happen with Nvidia, but it's happening with Apple,
Apple, yep,
where Apple is saying, where TSM is like, yo, man, the demand for chips, because you got to understand TSM makes chips for so many other companies.
yep.
And what I've been reading, so it says TSMC capacity pressure appears to be one of the major drivers. And TSMC, which is heavily burdened by the demand for AI chip makers like NVIDIA and AMD. You have to also understand that I think from a capacity standpoint with TSM, it makes more sense to spend your time and resources on the higher end
Yep.
chips.
Yep.
The chips that go into the iPhones and some of Apple's products are not those high end like GPUs that go into like AMD and what Nvidia needs. So you're probably going to put those at the bottom of your list. But
Hmm.
Apple's still like, we need chips. Who is the other foundry business
Yep.
that is available? And it says that Apple has talked to Intel and Samsung as a second source of diversifying their supply chain. We literally talked about it. I don't know
We
when we
talked about
talked
that.
about it, but we literally talked
Yeah.
about that TSM. Like, I don't think that their Arizona plants are fully operational yet.
Not yet. Not yet.
So they are capacity constrained. And here comes Intel to the rescue.
Listen, like we couldn't have like talked about every single point. Like I feel like every single point we hit from Intel being like a company that's like the government's not gonna let them go down. Guess what? The
Nope.
government took a stake share on it. Oh, Intel will have to like kind of start selling some of the. What happened? They start selling some of their part, and then Intel might be getting into a partnership with Nvidia and like all of those different things that we talked about. Like it happens like bullet by bullet by bullet. You know what I mean? And now it's like you see the stock is just soaring, man. Like I I don't know. I did not expect this to happen within like
Heck
few
no.
months.
Heck no. I literally wrote down in the group when I was starting to build my position. I said this could take like 5 years. And I said, I don't
Uh-huh.
care what the stock does this year. I'm not going to look at it. Next thing you know, 500% return.
Crazy, crazy, crazy,
This
crazy.
this was a $20 stock at the beginning of last year.
Yep, yep. And we even hit a low of like $17, I
I
think.
think we hit a low of 17. Yeah, I think it was like
Mhm.
17 bucks. So now I will say this,
Hmm.
the partnerships, the headline news that has come out of Intel is all good and dandy, but when you see a stock that runs like this,
Yeah,
they have
you gotta be careful.
execution is going to be like,
Yep.
if Intel misses on their next earnings report, or they don't deliver like really really good numbers and good guidance, the stock could easily fall 15,
You can call.
20%. It could
Yep.
fall.
Yep.
So you just have to keep that in mind, that when you see a stock run like this, that demand, not demand, but execution and guidance are going to be so important, because
Very important.
what's going to happen is, if you're valued at X but you're not delivering Y, you're going to have analysts and other stuff saying, okay, if we run our numbers and blah 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 blah, you're not worth this price. So
Yep. Yep. Yep.
I mean, Intel
Yep.
at
Oh,
130.
130.57 all-time high. It is crazy from $20. That's like that's insane. That
Yeah.
is insane to me. But again, don't tell us we didn't tell you. Like it happened a lot faster than we thought it was gonna happen. But nevertheless, it happened exactly. The story have really played out how we thought it was gonna play out. Now, the thing that we're still seeing a struggle with is, I mean, I think we're starting to see some, um, silver lining now, especially with those cybersecurity stocks. I mean, some of them kind of got like a little beat up, but let's look at some of the earnings that came out for Datadog and FTNT. I mean, we talk about AI a lot, you know what I mean?
Hmm.
But on top of that, you need some type of security, some type of cybersecurity that comes into AI. Now, we talked also about how some of those companies might have to consolidate because there's a lot of cybersecurity company out there, and there's big ones, there's small ones. So now the fact that we are seeing some of those companies actually like reporting such good numbers and really like showing that demand for their services is not only getting bigger, but it's getting bigger at a faster rate. So now, what does that explain? What does that mean for some of those cybersecurity companies? So let's talk about some of those earnings, especially Datadog and FT&T.
Yeah. So we saw Datadog was up 30% after earnings. We saw
Mhm.
FTNT was up big after earnings. I think it just, let me just go look at these moves. FTNT, Fortnite or Fortnite. Yeah, Fortnite went from roughly $84 pre-earnings to $114 after.
Crazy.
And Datadog went from 128 to 200 after earnings.
Mhm.
So, what did we say months and months and months and months and months ago was mission critical mission critical software companies will find a way to distinguish themselves from the other stocks that may whose businesses might be in trouble, like your Adobes, your ServiceNow,
Mhm.
your CRMs, those seat-based, your Workdays, right? Those seat-based models might be in trouble, but your cybersecurity companies might have some value because what they're providing is mission critical. Because you also have to understand this. As AI gets more complex, hackers have more tools to develop things that can create cybersecurity threats.
Yep.
You have to understand that, right? They can create more different types of malware. They can create different types of viruses and things like that, you
Mhm.
know, different types of phishing schemes, right? Because AI will help them. But Datadog, let me read you Datadog's information. So let me go through this earnings report real quick. Let me look at my notes. All right. So Q1 2026 revenue was about 1 billion. Revenue growth year over year 32%. Non-GAAP EPS 60 cents per share. Operating cash flow 335 million, free cash flow 289 million, and 4.8 billion in marketable securities and cash. So they have a good, healthy cash balance. But this is the thing that I wanted to point out to is their annual recurring revenue customers that pay over 100K in service fees went up from 3,770 to 4,550. So what does that tell you? More customers are seeing value in what they provide. So that's a huge move
That's
in customers paying at least $100,000 in annual revenue to them. Datadog also gave guidance of full 2026 revenue of 430 billion to 434 billion, which beat estimates by a pretty hefty margin. So it says Datadog is positioning itself as an AI era observability and security platform. They said customers are deploying modern cloud-based AI-enabled solutions, and Datadog has launched several AI-related products, including GPU monitoring, Bits AI security analyst, and an MCP server.
Mhm.
So basically, what this saying is Datadog's report says this: AI creates more systems to monitor, not fewer, more agents, more cloud workloads, more GPU usage, more API calls, more model failure, and more security risk all create a need for observability. So the more things you got running in the background from a security standpoint, the more you got to monitor it.
Yep. Yep. Because now you have so many entry points for any, unwanted,
Unwanted,
guess. Yeah, unwanted guess to be able.
unwanted guess. Exactly.
Yeah.
Exactly. So obviously there's a need there, but also too, it looks like Datadog has not really created, but they've executed on all fronts in providing that need. So that whole like SaaS apocalypse, and people were saying like, oh, what did they say was dead? Oh, software is dead. Claude
Yep.
can replace all software companies. I mean, if you go look at Palo Alto Networks after their earnings report, they're up now, what, 45% since then?
Mm-hmm.
Um, let's take a look at Fortnite. Fortnite 2026 revenue, 1.85 billion, 20% year over year growth. They're a more healthier company. Product revenue was up 41% year over year. Billings were up 31% year over year. GAAP EPS was up 29% year over year. Operating cash flow 1.08 billion, free cash flow 1 billion. Expected full revenue for 2026, 7.7 to 7.81 billion, and billings of anywhere between 8.8 to 9.1 billion.
Crazy.
So when you go look at what you can take away from all of this stuff is that, again, AI is creating more entry points for security holes, and you got to plug them.
Yep.
So the companies that have the ability to show value in plugging those potential holes are going to be the true winners. Now, like I don't think it's going to be every company or every cybersecurity company, because if I'm not mistaken, Cloudflare was down pretty substantially today. Um, I still think Cloudflare is a good company. I think they might have just had a bad quarter, but
Yeah.
Cloudflare was down 23% today. And I think another one that was down today, I think Fastly. Yeah, Fastly was down. I don't know, Fastly was up today, but
It was up. Yeah.
they came down, they were down yesterday
They
from
dropped a bit.
31,
Yes.
they
Yeah.
dropped 20%. So this is what I'll say. Some of these smaller cybersecurity companies, they don't have a lot of room for error. They
Mm-mm.
don't. And if you look at Fastly, one of the reasons why Fastly was down is because if you look at Fastly from their last earnings report, they went from $7 to $34
Yep.
and from February to April. That's a crazy move. So what happens is when your next earnings report comes and you don't hit on all cylinders, you get sold off.
Yep.
So, but if you are looking for value to me in software stocks, we've been, I mean, we've been beating a horse for the last couple of months. We said cybersecurity is where you need to look.
Yep. Yep. That's definitely a sleeping giant. And now, like you said, though, it's like not all of them are gonna be. They're not all gonna be equal. Some
No,
of them are not gonna make it,
nope.
and some of them might be left behind. But it just depends on which one actually is able to execute.
Yep.
Tulio,
Execution is
Tulio,
key.
yeah, Tulio was actually up today too.
Was Twilio up today?
Yeah.
Yeah. Because if you go look at some of these stocks that came down from the whole quote unquote SaaS apocalypse, I mean, we had CrowdStrike, which to me is probably one of the more Teflon companies out there, dropped to
Yep.
354, $340. Now
Yep. They're up today.
we're trading at 527.
Yep.
And then we got Palo Alto Networks that dropped from a high of 223 to 148
Mm-hmm.
and now just got above 200.
Yep.
So the market is starting to realize that, okay, maybe we oversold cybersecurity a little bit too much. let's start looking at companies that provide value in the AI space. And I think again, AI is going to enhance them, not destroy them.
I destroyed them. Yep. Yep. Absolutely. But again, there's a lot of opportunities. You just gotta know where to look,
Yeah,
and it has
you
to
got
make sense.
has
It
to make
has to
sense.
make
It has to make sense. It has to make
yeah.
sense.
And
Yep.
I do want to bring back something you said last week. There are sectors right now that are being overlooked. Once
Hmm.
this whole rotation start happening, those sectors that we kind of not paying attention to might start getting um some attention because as you mentioned, like fund managers don't just sit on the side. They move their money from one place to the next, right? So it's like they figure out where they need to move money to and then they move it there. And I don't know. I feel like right now, as the stock is getting higher and higher, this is a good time for anybody. If you got some downtime, start looking at some of those sectors that are getting beat up, and start understanding why they're getting beat up, and
Hmm.
what and where the opportunities might lie when the time comes. Like one of the biggest thing you mentioned last week, and I started taking a look at it is healthcare. Like some of those healthcare stocks, they're getting beat. Go look at Pfizer and all those other ones. They're getting like they're not going anywhere for the past year or two. They haven't gone anywhere.
Nope.
Go pay attention to those sectors because those that's where opportunities might be lying once we start seeing money move out of the technology and all this stuff. Because at some point they gotta take profit. At some point they gotta take profit. So with that
And
being
I'll
said, let's go ahead. Go ahead.
yeah, I just want to leave one thing, and this is just my I wouldn't call it a conspiracy theory, but I will say that you just need to pay attention to what could potentially happen that I saw today. I am not a medical expert. I don't know all the details
Mhm.
behind hantavirus and what could happen. But if the narrative of that virus starts to catch wind and fear of spreading that virus starts to, I guess, escalate, go look at what Moderna did today.
Mhm.
Moderna was up 11% today.
Yep.
Is that a coincidence? I don't think so. N- Novavax was up 11% today.
Mhm.
Is that a
Not
coincidence? I
not a
don't think
coincidence.
so. So there is no vaccine for hantavirus. I don't, and what I read is that it's hard to spread from human to human. Whether that is true or not, whether I don't know the details.
Huh.
But if this thing starts to catch headline wind, I am almost certain that names like Moderna, Pfizer, Merck, Amgen, Johnson and Johnson, Regeneron, Biogen, Novavax, just like we saw during COVID,
Mhm.
and a lot of these stocks are undervalued right now. So
Yep.
if we ever get a rotation that is based on this headline, that's where the
That's what
money's
you
going.
get.
That's where the
Yep.
money's going to go.
Yep.
So I just thought that that was very interesting that when I started seeing all these headlines about, oh, this passenger's been exposed, this passenger's been exposed, and I looked, I said, what's Moderna doing today?
Yep. I think ran up.
I think ran like crazy.
Mhm. Mhm.
So I would say you got to keep that in your back pocket right now. So
Yep. 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 Let's look at some of the economic calendar for next week. Monday, I think we talked about this last week. There's not a lot of good stuff going on Monday. That's existing home sales. We'll see how things go there. But overall, Tuesday, we have CPI and core CPI coming up. That's going to be important to keep an eye on. We have a Fed president that's going to speak. The Chicago Fed president is going to speak at 1 p.m. And then Wednesday we have the core PPI. That's actually coming up at 8:30. Also, that's another one to keep an eye on. And then Boston Fed President Susan Collins is actually going to make a speech. And then we have on Thursday, before we have the initial jobless claims and some import price index coming up, some business inventories numbers coming up, and then we have about one, two, three different Fed chairs are going to be talking on that day also. So lots of Fed chairs talking. I don't know what they're going to talk about. I don't know what question they're going to get, but we're definitely going to keep an eye on that. But in terms of like big economic calendar news, there's not a whole lot happening next week or the week after either. I'm looking at the week after. We don't have a lot of stuff going on at all. But with that being said, Wale, any last minute advice or word of wisdom as people go into next week?
The only thing I will say is SF Fed governor, I think, or SF Fed, I don't know what they call them, but the SF Fed lady spoke um,
Mm.
yesterday. And to me, I really feel there's going to be a lot of contention about what to do with rates with Kevin Warsh coming on board.
Yep.
I think there's going to be a lot of contention. Um, on paper, I almost feel like Kevin Warsh is going to be coming in guns blazing. We want to cut rates, whether or not it's justified or not. I don't think he really cares, to be
He
honest
doesn't
with you.
care.
I don't
He's
think
not going
so.
to care.
I don't think so. But fortunately, Powell is staying on as a governor, and the decision is made by a committee. So I will be surprised. I would not be surprised if we start seeing less unity in the Fed
Yep.
when they're making decisions.
Yep.
Um, and I am still in the camp. We're in what? We're in May. We're almost through June. I'm still in the
Hmm.
camp of zero rate cuts in 2026, unless it's an emergency cut like we saw during COVID.
Yep. Yep.
Yeah,
Something has to be big that happens for it.
something has to be broken in the system for the Fed to make that move to cut rates.
Yep.
So yeah, I really I
I
want
don't see
people,
it.
yeah, I want people to spend time and really understand the energy supply chain that has been disrupted and how slow it really takes for you to see the real effects.
Hmm.
Because these oil tankers, the speed at which they move is like it's like bicycles, somebody riding a bike. They don't move that fast.
Yes. No. Not at
And
all.
there are dozens of tankers that have gone nowhere over the last 2 months.
Mhm.
Diesel gas in California is above $8 a gallon now.
Damn.
Yeah.
That's crazy.
So I am still I am still in the camp that the full effect of the disruption has not been felt yet. And since we don't have a resolution, we don't know how long this is going to take. So I will say that take caution with that. I hope that the Fed doesn't get to a point where they feel they have to raise rates, because if they raise rates, we're in trouble. And so far, everyone said we're not there yet. So if it stays that way, great. If they just hold rates into the end of the year, to me, that's best case scenario. But if they have to
Yeah.
raise rates, that is something that I will say is that will if they raise rates, the market will be down like 20 or 30% in one day. That's what I
Yeah.
think will happen.
That is a fact.
Yeah,
That
that's what
is
I
a
think will
fact.
happen.
That
Yeah,
is a fact.
if they come out and say that they have to raise rates because inflation is not coming down,
Hmm.
hold on to your hold on to your butts.
Because it's gonna be a crazy. I don't even want to think about it because I think that's gonna just create a lot of panic for a
Mhm,
lot of people. You know what I
mhm.
mean? So again, I'm still with you. I'm still in the camp of zero cut. But like you
Yeah.
said, I think the Federal Reserve is gonna be cut. Like there's not gonna be more unity, in my opinion. I think there's gonna
Yeah.
be eh, my man is gonna come in and create some disruption. He's gonna come in with the new model that he has that he's gonna create, and then I won't be surprised if he start pushing people around. You know what I mean?
Mm.
And creating some kind of like how Trump runs his camp. Like hey, you're not doing start talking down to people, start treating them like they basically ain't shit. So I think it's gonna. I'm just curious to see the first few months how it's gonna look like.
Correct. That's exactly what I'm worried about
Yeah,
because Powell is out next week, Friday.
next week.
Yeah.
That's gonna be a very interesting time.
He's still gonna be on the committee. He's gonna be a governor, but he will not be the voice of the Fed anymore.
Yep.
So we'll see how the
Uh,
narrative changes. We'll see. We'll see.
hopefully he speaks some type of uh logic into these people.
I hope so. I hope so. I hope
With
so.
that, with that being said, man, if you guys enjoyed today's episode, make sure you guys subscribe, share the show, follow the Wall Street Rundown for more professional market breakdown every single week. And again, my name is Billy Clement. I got Wale with me. Until next time, you guys stay sharp, stay informed, and stay ahead of the market. Good
All
night,
right,
y'all. Have
everyone.